Welcome to CoinViz, the Bitcoin Halving. So in today's podcast, I'm going to talk a little bit about the Bitcoin halving and Bitcoin supply. So on Friday, April 19th, 2024, we experienced the fourth halving in Bitcoin's history. So we are now in the fifth cycle. So let me break down kind of what that means. So the halving, and I'm going to keep this, Bitcoin's obviously a very complex subject, but I'm going to do my best to just keep it constrained just to the halving. So the halving is essentially when the mining supply of the Bitcoin networks gets cut in half. So right now, at the fourth halving, so what we experienced on last Friday, the Bitcoin mining reward got halved from 6.25 Bitcoins to 3.125 Bitcoins. So I know some people might not understand Bitcoin, and that's why I'm here to help kind of explain this a niche. So first, let's explain a little bit about Bitcoin. So I'm going to go read right from Satoshi's white paper. So Satoshi Nakamoto was the inventor of Bitcoin. He was a pseudonymous figure that no one really knows who he is, or his actual identity hasn't been exposed, but he's the inventor, or the first developer of Bitcoin. So here's an excerpt from his the Bitcoin white paper. So when he invented it, he said Bitcoin, a peer-to-peer electronic cash system. So here's the abstract from like his white paper that essentially announced what his invention of Bitcoin. So his abstract: a purely peer-to-peer version of electronic cash would allow online payments to be sent directly from one party to another without going through a financial institution. Digital signatures provide part of the solution, but the main benefits are lost if a trusted third party is still required to prevent double spending. We propose a solution to the double spending problem using a peer-to-peer network. The network timestamps transactions by hashing them into an ongoing chain of hash-based proof of work, forming a record that cannot be changed without redoing the proof of work. The longest chain not only serves as proof of the sequence of events witnessed, but proof that it came from the largest pool of CPU power. As long as the majority of CPU power is controlled by nodes that are not cooperating to attack the network, they'll generate the longest chain and outpace the attackers. The network itself requires minimal structure. Messages are broadcast on a best effort basis, and nodes can leave and rejoin the network at will, accepting the longest proof of work chain as proof of what happened while they were gone. So that's his abstract, and it sounds kind of confusing, and it is confusing. I'm not fully sure what all that technical jargon really means, but essentially, Satoshi, what he was trying to do is solve the double spend problem. So it's a problem that's kind of it's why we have banks, right? So if I want to send you money, or you want to send me money, anonymous figure of whoever you are watching, right now, currently, we need to trust some third party. I mean, we can trust each other in a certain way, but essentially we rely on kind of banks as like third parties to verify the transaction. So what Bitcoin was trying to do, and there was a whole digital gold kind of movement leading up to Bitcoin. Bitcoin is, one that looks to be successful at solving the double spend problem. But there's a bunch of iterations of kinds of digital golds before. And trying to solve this problem of how can me and you individuals interact without having to rely on someone else. So essentially Bitcoin is kind of an accounting innovation. So you can think of, back in the caveman days, there were no records, right? There was no records. And then essentially we came up with kings, right? So the kings or the queens or the pharaohs, they had the record. So they had one record and you didn't get a copy. Then in accounting, we had a double ledger innovation, so that merchants, if I have a record of what happened and you have a record of what happened, that's two ledgers. Essentially Bitcoin, you kind of think of it as like a triple ledger of I have a copy, you have a copy, and then the network has a copy. So since everyone has a copy of a transaction, we don't need to trust any specific person because we have a network. So back to the halving, because I'm kind of wandering. So I guess the one thing, if you can come away from this show with any one understanding, in order to understand the halving, you have to understand Bitcoin supply. So really, Bitcoin supply is capped at 21 million. So the Bitcoin supply is permanently fixed at 21 million Bitcoins. One way to think of Bitcoin is the internet's invention of absolute scarcity. So kind of the invention of Bitcoin is this idea of absolute scarcity. So in human beings, we've always valued scarcity. That's kind of why gold became kind of, it's been our currency or money for forever. It's right. I think I heard somewhere that the amount of gold in the world would fit into 2 swimming pools, which when you think of it is like, or 2 Olympic-sized swimming pools. So large swimming pools, but when you think of the whole world, if all the gold in the world can fit into 2 Olympic-sized swimming pools, that's not a lot. It's very scarce. So gold traditionally has been, the best, I guess, money or store of value because it's so scarce. But the thing with gold is it's not absolute scarce. So there are, or there could be gold reserves somewhere else that we haven't discovered yet that no one knows about. So when you think of kind of Columbus coming over to the New World, and really when the Europeans found South America and the Americas, there was this whole gold supply. Or even, when you think of, so yes, the thing is gold can always be mined more of because if it becomes more valuable, it just provides them more of an incentive to mine. And the thing with gold is no one knows exactly how much gold or who has all the gold in the world. So Bitcoin supply is capped. And now you might hear of it refer to Bitcoin as digital gold, which I think is kind of a good shorthand description of what it's trying to do. But 21 million, you might ask, why 21 million? And 21 million is really, it's just because Satoshi Nakamoto said so. So in the original code of Bitcoin in his paper, he kind of just chose the number 21 million because to him it sounded like a good number. So 21 million, if you can take away one number from this show, or one thing, it's that if you understand that Bitcoin is completely scarce at 21 million, there will never be more, there will never be less, or actually, and even I could get into, actually the 21 million is kind of an inaccurate sum because even the first, I think it's the first 50 Bitcoins that were ever mined, they can't be spent because, Satoshi Nakamoto said so. So even at its most, there's 21 or 20 million, 21 million minus 50 Bitcoin is the total circulating supply. And over the years, a lot of people have lost their Bitcoins, or I think there's a story of the guy that he had a flash drive with like, I don't know, thousands of Bitcoins that when Bitcoins were like $1 a piece, and he lost them in a, essentially threw them out. So people have like lost their Bitcoin. So actually the number is actually much less when you think of all the ones that are lost. So 21 million is the total cap. And obviously if Satoshi Nakamoto and the Bitcoin said there's only be 21 million, they needed to come up with a way to distribute the 21 million. Do they do it all on the first day? Do they do, one a day for 21 million days? There's kind of what's the best way, or what is the way to distribute 21 million coins? Do you do it all at once on the first day? So that was that's where the halving comes in. So with the Bitcoin supply capped at 21 million coins, Satoshi needed to figure out a way to distribute them. So this led to Satoshi developing Bitcoin supply algorithm. So I want to really break down this formula because this explains kind of the halving. So essentially, this formula, so every 210,000 blocks. So if you think of in Bitcoin, there's blocks almost made every 10 minutes. So every 210,000 blocks, the number of Bitcoins that gets distributed gets cut in half. So the maximum reward, and let's see if I can find a better. So yeah, 210,000. So essentially, the way the halving works is every 210,000 blocks that are made, the mining reward gets cut in half. So it was originally 50, then it got cut to 25, then it got cut to 12 and a half. So you can almost think of Bitcoin as like this giant computer game, right? So all the computers in the network are playing this game if they're trying to essentially solve a formula, or it's kind of like a math puzzle. So all the computers in the world are playing this math puzzle to try to figure out the answer. And the answer is extremely complex. That's why the computers are doing all these calculations trying to figure it out. And the one computer that can solve the problem first gets the mining reward. So you can think of this as almost a game that every 10 minutes, the game's over. So within roughly 10 minutes is not the exact same time every way, but every 10 minutes, a block is created by the network based on who solves the problem. So Bitcoin was invented in 2009, 2010. And at that point, during before the first 210,000 blocks, the reward for winning that game was 50 Bitcoins. So all the computers in the world would, play the Bitcoin game, and the winner would get 50 Bitcoins. And then when they got to the 210th block, that reward got cut in half to 25, and vice versa. So this is the actual mathematical equation that dictates the halvening. So the number of blocks. So every 210,000 blocks, the reward gets halved. The maximum reward was initial 50, and then the halvening is 2. So it cuts it in 2, and then the current halvening epoch is the number. And there will be 32 of these kind of halvenings before the final Bitcoins minted. So here's another, I think, good graphic of, so in 2009, the reward was 50. And during this time period, the first 210,000 blocks, 10.5 million Bitcoins were created. So that's actually half of the total supply was just created in the first 210,000 blocks. Then in 2012, 5.25 million Bitcoin were created because the reward was 25. And then the next halvening in 2016, 2.625 million Bitcoin were created. So you can see this number keeps cutting in half of the total supply. So right now we were just in this period of 2020 where the reward was 6.25 Bitcoin. So in the last halvening, 1.312 million Bitcoin were created. And the big event that happened on April 19th was now we're in a different epoch of this reward. The 6.25 has been cut in half to 3.125 Bitcoin. So over the next 210,000 blocks, 656,000 Bitcoin will be created. So it really, you can think of, and so this number will keep getting halved, and you can imagine we're still very early. So eventually this number is going to be fractions and fractions. So you'll have all the computers in the world playing over, fractions of a Bitcoin. So the fact that it's still distributing 3, obviously is not a lot compared to the 50 that was getting created in 2009. But still, when you think about this game is going to keep going, I think the projected last block is going to be created in 2140. So we still have, over 100 years of this, Bitcoin game being played until the final Bitcoins are minted. So really, so the supply algorithm is really just Satoshi's way. It was, there was no, it's his way of distributing the coins, or the way that the Bitcoin game distributes the coins. Again, this is just based on Satoshi Nakamoto, who's the founder. This is the mathematical equation that he determined. So that's really the rhyme or reason. So when you ask why, it's just kind of, that's the way it was. He could have easily, this formula in the Bitcoin game could have been created to say on the day one, 21 million coins are out there and then people spend. But this is just kind of the way that it's been structured. So yeah, and here's another graphic. I think, so when you might hear people call them cycles or epochs, but a Bitcoin cycle is the time between halvening events. The 2024 halvening marked the beginning of the 5th cycle and was the 4th halvening event. So we are kind of in epoch 5 now, or cycle 5. So we just experienced this halvening, and now we're in this stage of 3.125 as the reward. So you might ask why, so why does this matter? What does this? So I think the reason I want to do this show is that people talk about the price of Bitcoin like all the time. That's all they talk about is the amount of US dollars that people are willing to trade a Bitcoin for now. That's kind of what the only number. But I think it is obviously an interesting number, but there's lots of more technical, interesting numbers that kind of make the Bitcoin network. So it's really based on a lot of math. So this kind of isn't really talked about, but it's something that drives the price. So I can go to Coin Market Cap. So Coin Market Cap is it's a good website for just tracking the price of, I guess, cryptocurrency in Bitcoin and cryptocurrency, because that's one of the confusing things is people lump it all together like it's the same thing, but it's different. So when you think of the crypto market, so and if I can explain this, Bitcoin is crypto, but not all crypto is Bitcoin, if that makes sense. So crypto is kind of like this larger space, and then Bitcoin is just one thing, but it's the biggest thing in the cryptocurrency space. So here's a list. So right now, let me try to go back. So yeah, here's a list of all the cryptocurrencies. So Bitcoin is the biggest one, and right now the price was $66,000 for Bitcoin during the recording of this. And one of the things is, I mean, people will look at these prices, and this is really the only thing they talk about. So one of the reasons, so we can go back, if we go back a month, so April 19th, this is when the Bitcoin halving occurred. And as you can see, the price really has not been affected. And that's kind of one of the ways that this halving plays out is since you have this constricting of supply, the market doesn't fully understand that, right? So not many people actually understand that, last week the Bitcoin network was making 6.25 Bitcoins every block, and now it's only making 3.125. So there's kind of this lag that occurs that has traditionally, led to these giant bull runs. So people say that Bitcoin is very volatile, and I push back that actually Bitcoin is probably the most stable thing there is, because we can see exactly how much Bitcoin are going to be made and will continue to be made out to 2140. The thing that is volatile is the human beings, what they're willing at any moment in time to pay in US dollars for one Bitcoin. That is the thing that is volatile, is the actual USD price. So obviously human beings, I mean, a lot of them are irrational, and that's kind of one of the things is Bitcoin's just computer code. So it knows exactly, it's tick-tock, next block is what they say. So every 10 minutes, it just churns out a block. It doesn't care. It just keeps going just based on its program. And especially if you zoom out, so you can see, here's the historic price, like USD price chart. So you can see it does get pretty volatile. You have these massive spikes, then come down, and then other massive spikes, then it comes down. And right now we're kind of in one of these massive spikes. We've kind of come down a little bit where we're still spiked up. So really the halving is something that impacts these bull runs or these massive prices and spike. And one good way to I think one good model, and the best model that kind of shows this, is the stock to flow. So stock to flow is a model that was built by Plan B. He's kind of a Twitter figure. So here's a graph of, the stock to flow, which is, so you can see, and let me click on this because this will bring us to the actual stock to flow model. So this was a model that kind of a lot of people in the Bitcoin or crypto space follow to kind of track the price. So let me explain this graph a little bit. On this x-axis, you have the date or year. So it starts in roughly 2009, 2010 when Bitcoin was invented. And then right now it only shows to 2028. So that's the x-axis. On the y-axis, this is actually a log scale. So it starts at $1, $100, 1,000, 10K. So it keeps going in factors and tons. This isn't a linear axis. So log scales are kind of hard for humans to understand because we can't really understand exponential. But just when watching this, just keep in mind that this is a log scale on the left. So what this displays is essentially what's Plan B try to do is just try to say what should the price of Bitcoin be at any moment in time, based on the supply, not on the demand, which is people coming and buying it. So let me do maybe this price. Okay, so yeah, this this is the stock to flow. And maybe if I read the definition. So what is stock to flow? Stock to flow is a forecasting tool for Bitcoin price. It creates a line on the chart above that shows an estimated price level based on the number of Bitcoins available in the market relative to the amount being produced or mined each year. The score on the stock to flow line is the forecasted price for Bitcoin at that particular time. By hovering your cursor over the line on the chart, you can see the forecasted price. To date, it has broadly forecast price correctly as Bitcoin price has followed the stock to flow line. As the amount of Bitcoins to be mined reduces over time, the stock to flow number, or the S2F ratio, increases as supply coming into the market is reduced. This is why the model is forecasting that the price of Bitcoin will increase. So essentially, he created like what should the price be based on the amount that is mined. So essentially these kind of increases are like the halving events. So these dates are the halving events. So if you think, so essentially why this matters is this Bitcoin price that he's marked over. So it's all color coded. So this is days until the next halving. So right here, the purple is 0 days. So it means like right before the halving, and the red is like, when you're multiple days. So if you zoom on, essentially, so you can think, yeah, this color code goes purple, blue, green, yellow to red based on the number of days from the halving. So right now, we are lots of days from the halving. So we're in this red space because, the next halving won't happen until 2028. So maybe if I zoom in, let's zoom on this last cycle. So, let's see, maybe it might be easier if I start off on the first cycle. Let me try to reset my cursor. I'm going to get rid of the model variance. This is being buggy. Okay, so the first cycle, let's zoom in on. So essentially, the whole reason stock to flow kind of matters as a forecasting tool is essentially it kind of just shows how that there's a lag between the market realizing that there's actually less Bitcoin being made and when it actually happens, which is played out over time of essentially the halving event. Maybe if I get rid of the stock to flow, that make more sense. So here's the price marketed on a here's the price on a log scale. Let's see. There we go. So essentially, it's color coded, right? So you have these halving events, which are these dashed lines. I don't know. It's not really easy to see on the screen, but you have these halving events here. And then essentially you have these big run-ups in prices, and then it comes down. That it always tends to happen, usually around in this green space. So that's like between 800 and 1,000 days till the next halving. That's when the price seems to go up, because that's kind of when the market realizes, oh, there's not as much Bitcoin on, and then it comes down. So the first kind of cycle, we had this run from, or I guess this would be the second. So the first one, Bitcoin started with 0. It went up to $29, and then it came down to 2. So essentially you see these wild runs up, and then it comes back down, it comes up, but always when it comes down, it stays higher than it used to be before. So in this last cycle, it got low, and then it came up to like 60,000, came down a bit, it came really down. So essentially what's stock to flow, and the way it just is kind of forecast out over the years is that essentially based on the halving event is essentially like a supply shock to the network. And then kind of there's a lag between when the supply shock actually occurs and when the market, or when, human beings kind of feel that supply shock. And that leads to the price going super high, because usually there's kind of this hysteria as people, as it goes up, and then it comes back down. So kind of, you can almost think of the halving as like, it is a supply shock, right? So for the last 4 years, every 10 minutes, 6.25 Bitcoins have been being created. Now, since last at this recording, since last Friday or April 19th, now only 3.125 Bitcoins are being made every block. So essentially there is less Bitcoin being created, but the market really hasn't, felt this yet. And it takes a while for that kind of that lag effect. And that's kind of why the halving matters, is it did happen. And, the theory goes, especially if this model is not rocket science. So it's not, there's nothing to say this will current happen. It's just showing this kind of this phenomena that's tend to happen. So I don't want to get into price prediction, but essentially, I think just based on this model, it's safe to say that, especially as these halvings keep occurring, that supply is just going to get, constricted and constricted. And the stock to flow is just a good model that kind of, I think, helps visualize like what the halving actually does. If it actually, this constricted supply just takes a lot of time for the market, for the demand to realize it. So that's stock to flow. So the fifth Bitcoin cycle, or the Bitcoin cycle we're on, will run from block. So essentially the halving, we just had the 840,000th block of Bitcoin. And that's when, again, based on this formula of every 210,000 blocks, the reward got cut in half. So as you can see, this number is just going to keep getting less and less. And then in 2008, this number 3.125 will be cut down to 1.5625. And vice versa. Let's go back to the Bitcoin white paper. Let me read a little bit about, I'm just going to do a reading of the introduction of Satoshi's white paper. So, and again, this was written in 2009, 2010. So actually in the first block that was mine, Satoshi, he wrote like in kind of the codes, he wrote, what did he write? Chancellor on the brink of, let's see, or let's find the actual code. Because I could do a whole show just on Satoshi Nakamoto, because I mean, he's kind of like a folklorish figure. He's not exactly the deity of Bitcoin, but he's kind of like the creator, I guess, because he just kind of like made this invention. And it's pretty clear that he like knew what he had invented when he did. So let's look at the Satoshi. It's called like the Genesis block. His comment. Where's his comment? Let's see if I can find it. I know it starts with Chancellor. Oh yeah, so this is the actual so yeah, 14 years ago on this day, I mean, on the founding of Bitcoin Day, so it's much longer now, but Satoshi Nakamoto mined the Bitcoin Genesis block, or the first Bitcoin block. So Satoshi left a message in the code of this block. The Times, 03 Jan 2009. Chancellor on brink of second bailout for banks. And that was kind of his comment. This was all based on, there was like, I guess, a newspaper article. Like an actual newspaper headline from that day was the Chancellor on the brink of second bailout for banks. So Satoshi, he was very upset with like the banks and financial institutions. So kind of his comment was to, I guess, and it was essentially the cypherpunks were kind of very, I mean, there was this whole kind of movement before Bitcoin was actually invented about trying to create this, digital cash, or like I think it was called DigiCash or digital gold, to try to make commerce on the internet. Because a lot of the financial infrastructure that we utilize now, like a lot of it is actually not built natively for the internet, right? You have these banking institutions that have been doing business, for hundreds of years a certain way. And then this new technology came along called the internet. And then they tried to adopt like their old technology to this new technology. So especially we're so used to using like Venmo and bank transactions. But when you think about, especially like Venmo, right? Like when your friend transfers you money, you get your money right away, right? You're on your computer screen. It says, oh, if I send you $100 on Venmo or you send me $100, as soon as you send it, it shows up, oh, I have $100. But really, it's just the number 100 on a screen, because behind, kind of on the back, so on the front end, yes, you got your money, but really the problem with our current, financial system and financial rails is that there's actually a lag to that, right? So on the back end, and we all kind of know this intuitively, when you make bank transfers, right? It takes 3 to 5 business days. Why? Why does it take 3 to 5 business days? It's just literally because the gears of the banking system takes 3 to 5 business days to verify transactions, right? Because you have, the bank needs to verify the check, and right now there's all these wheels. So I think a good way to think of this too is a thought experiment. So let's say that it's Friday at 4 o'clock, or Friday at 5 o'clock, right? So, or 5:01. So the banks close at 5 on a Friday. So Friday at 5:01, say you have a friend, I'll use the country of Poland, because this is an actual example that I had to do. So when I bought my Polish sheepdog, right, I needed to send money to Poland. So let's say that it's Friday at 5:01 and you have a friend in Poland that you want to send $100. What is the fastest way to get that person their money? And you could Venmo them, but again, there's a 3 to 5 day business lag. So if you send that person $100 on Venmo, and I'm using Venmo is actually a good, but like even a wire transfer, right? So if I wanted to wire transfer you, the bank's closed all weekend. That wire transfer wouldn't actually even hit till the Monday. So literally the fastest way to actually get that person in Poland or any country across borders is, I mean, for me, you'd have literally fly there with $100 in my pocket and give it to you, right? Because I could drive to Toronto or take a train to Toronto and then take a plane to Warsaw and then get there probably before Monday. And even Monday would take 3 to 5 business days. So essentially Bitcoin and the whole crypto space is trying to rethink this. There's no reason, especially we live in this digital world where, we're wired 24/7. If I can send you an email, why can't I send, money at any point in time? So really that's kind of, especially this double spending, we rely on banks or third parties to send money. So really, his Genesis block and really what Bitcoin's trying to do is in the whole crypto space is actually this invention of blockchain is kind of a new way. It isn't like an accounting and innovation. So if you can use, a network of computers in the skies instead of any one entity to send money, then it changes a lot, right? Because then you don't need to rely on one person. So with Bitcoin too, specifically, if I want to send you a transaction, if I just pay a miner or pay someone to get on the next block, I can have you that money in 10 minutes, because as long as the miners verify the transaction, you will actually have the money in your wallet, not have to. There's really less lag. So it's really creating this, really the whole crypto space. I mean, at this point, there's whole thousands and thousands of coin. I even recently heard about this coin called Anus coin, like literally Anus coin. Like people are making meme coins, and literally now it's at the point where anybody can make a coin. So yeah, here's the first comment of Chancellor on the brink of the bailout. And yeah, so essentially, we are still pretty early in its adoption because, it's just so early. Because if you see the mining reward is 3.125, which, if you think this game's going to keep getting played till the year 2140, and at that point, so once the last coin is mined, then all the so then the 21 million will be created, and then the miners will just make their money just from transactions. I think that's the point. But again, that's a long way out. Bitcoin could get hacked. I guess it could be, something could happen. All the computers could shut down. So right now it's more just theory, because obviously we're in the year 2124, so we're trying to project out. The proof of work is really, that's the innovation. Let's go down to coin market cap, because this is really, you can just see how many other cryptos, and I guess I'll try to maybe talk about some other ones too. So Ethereum is the second biggest crypto, and so it's important to understand that Bitcoin is crypto, but crypto is in Bitcoin. So Ethereum is a whole other different coin or currency. And it's kind of like a smart computer, I guess. I think that's kind of what people explain it as. But essentially, if Bitcoin's invention was proof of work, the proof of work algorithm, Ethereum's invention is kind of smart contracts. So, smart contracts. So Ethereum kind of so essentially, there was a whole, right. So once Bitcoin was invented, a lot of people kind of got bored because I mean, essentially that's what humans, right? We're not satisfied with it, and we can't just go, oh, Bitcoin's here. We have, digital gold or we have money. That got kind of boring very quickly. So then, hackers and cypherpunks and developers started to think about, okay, this invention blockchain that was invented, what else can we do with it, right? If we can make money, what else we can do? And Ethereum is kind of this open source software that said, well, wait, if money is just a contract, right? Money is just an invention. What if we took blockchain and applied it to contracts? So what if we could secure anything in a smart contract? So essentially, where Bitcoin would, it's kind of taking third parties and making it towards money. When you think of contracts, like a lot of us, we need lawyers, we need, insurance agencies. We have, again, these trusted third parties that we trust to, so essentially Ethereum just took blockchain and applied it to contracts to try to make contracts smart. Because right now, think about a good example is if I want to sell my house, right? If I want to sell my house to you, how do we go about that? Right? I mean, you could show up with a bag of cash and then I guess I could give you the keys and then I could leave and you could inhabit the house. And that would, I guess in theory, work, right? We would know that we did the transaction, but what about, your city or state government or, how would they know who owned the bank, right? So we need, especially real estate's a good example because it's tangible, right? We all understand that if I want to sell a house, we need to record it somewhere who owns it. Like it's not good enough that you give me money and I give you the house, give you the keys because then tax time's coming around and the tax man's going to send me the bill. They're not going to send you the bill because they still think I own the house. So you get very complicated very quickly of, okay, well, if I hire a lawyer and a real estate agent and you hire a lawyer and a real estate agent, they can talk and then they can go down to, the county center and then the lawyers can both sign a contract there that, the county will hold on to and that county's record will be the record of truth. And we'll all agree because the county says so. So essentially what Ethereum's trying to do is saying, screw lawyers, or I mean, it's not saying this literally, but like, why do we need to trust third parties to execute contracts? If I trust you and you trust me and you have the money and I have the key, why can't we just make a deal, right? So Ethereum is kind of trying to do something like that with blockchain. So with blockchain and with Ethereum, what we could do is if you have a bag of cash and I have a house and we both agree that your bag of cash will go to me and I'll give you my key, what we can do is we can write that in a smart contract. So I could write up a piece of code saying, and we'll call you, I don't know, Johnny. Johnny's, let's say $1 million. You got a million of cash that, if Johnny gives me $1 million, I'll give him the key. And we could write that in a smart contract. And then Johnny could put his $1 million in a wallet and I could put my keys in a wallet. And then the computer code could say, okay, Johnny's $100 $1 million is in a wallet. Matt's key is in a wallet. Do the swap. And then the computers, instead of having to rely on lawyers and real estate agents and this, the government or the entity to execute those contracts, we could have computers do that instantaneously at any time in time. So real estate's just one, right? So insurance contracts, selling cars is really the idea of it. Contracts are everywhere when you look at it. And what Ethereum's trying to do is kind of be almost like just software. So Ethereum in their Solidity programming language is trying to be like almost the language that people would use to do smart contracts, because smart contracts can be applied to really anything. So even think of insurance payouts, right? So if I own a car, right? So like contracts are everywhere. And essentially, if for insurance, I can trust a Geico. But what Ethereum's trying to do is be essentially smart contracts for take Bitcoin's technology, which is blockchain, and eliminating third party. Essentially, instead of trusting a single entity, we can trust the entire computer networks, and it kind of makes it more resilient. Because even think, if you trust a bank to hold your personal information, if that bank gets attacked because it's a single place, then your data or your information could be exposed. So really, I think people will call this Web3. So it's kind of really just the next iteration of the internet. Is one way to think about it, because people are kind of tinkering here with what could we use computers and technology for? We could use it for money. We could use it for contracts. So those are kind of the two big ones. And then you have then kind of the smaller, also the idea of stable coins. So like Tether is a stable coin, USDC, but there's also people trying to, obviously too, if we right now think in terms of currency, if something like Bitcoin is volatile, or one day it's $40,000, the next day is $80,000, it's not good to do transactions, right? Because one day your loaf of bread costs $1, the next day your loaf of bread costs $5. So stable coins is another kind of use case, and I'm not super familiar with it. I just kind of know the general idea that they're trying to make cryptos that are stable or tied to the US dollar. What's another one? So Dogecoin too. Dogecoin, there's a whole meme, like a meme coins too. So you might think of, I think during the pandemic too, we might all remember, I think it was the GameStop, right? Where you had these kind of internet native people, especially it seems like younger people, just wanted to trade GameStop. There's kind of this swarm of people, right? So like even the idea of a meme, like just a joke on the internet, that's kind of like a digital thing where people said, what if we just made a cryptocurrency that was a meme itself? So that's kind of what Dogecoin is, right? So people might laugh at it and joke, but like memes are powerful. They might be one of the most expressive forms of communication that mankind's ever invented, right? Like everyone kind of understands, or we all remember the good memes. So almost Dogecoin tries to apply. What if we made a cryptocurrency that was just a joke, and that was just it, and that's kind of what Dogecoin is. So that's and yeah, there's a whole space. So all these coins are, just kind of iterations of people tinkering. But again, for this show, I'm just wanted to focus on the Bitcoin and the halving, because it's kind of, at this point too, it's the largest entity in the space. So I think, so yeah, the market cap, like the total Bitcoin network right now is valued at $1.3 trillion. Or $1.3 billion. No, $1.3 trillion. And then Ethereum, which is the next one, is almost $400 billion. So Bitcoin's the biggest one at this point. And again, it's just trying to be almost a response to our current finances and current currency. So it's trying to be almost like a computer native currency, where instead of relying on banks or financial institutions, we just trust computers and computer code. And that's kind of I think, especially if you can understand, again, coming back to the one number, which is, if you can understand that Bitcoin is 21 million and it's literally just infinitely scarce, and it's just really, I think most people, how they view it now is just kind of like digital gold. And I think that's kind of what people accept. Like, I think it is a very good explanation of what it is. It's just digital gold. It's this thing, or essentially this network that is completely limited in supply at 21 million. And that's it. And that itself has value, just because human beings, we've always valued scarcity, right? Again, coming back to all the gold in the world can fill 2 Olympic swimming pools. And since it's so scarce, that creates value just because of the scarcity, right? If we traded pebbles, who cares if you pay me 1 million pebbles for my house? There's pebbles everywhere. But if you pay me, a couple bricks of gold, wow, a couple of bricks of gold relative to 2 Olympic swimming pools is so I think that scarcity is what ultimately provides value, because why don't we use, grains of sand as currency? That, right? There's so many grains of currency that it's useless because it's not scarce. So really, the 21 million is the supply, and that's kind of Bitcoin's big invention. Is never before have we had gold's the closest thing we've had to be something being absolute scarce, but due to the computer code, Bitcoin is strict at 21 million. There will never be more, never be less, or even gold. If it became so scarce, people might invest in exploring new technologies to extract more gold from the earth, because and that's the other thing. Nobody knows how much gold there is. Nobody knows how many dollars there are. Nobody knows how many dollars there will be 10 years from now, because it's not strict. There's nothing fixed. Whereas especially at this point, Bitcoin is decentralized, so no one person can make more Bitcoin. It's really just part of the game. If you think of Bitcoin as a game, I think that's a good analogy. It's just a computer game that people are playing to win coins. So the next big number 2, if you just understand 3.125, that's how many Bitcoins are being created every block, or roughly every 10 minutes, right? So 3.125, that was, and what happened on April 19th was we just went from the reward being adjusted from 6.25 Bitcoin to 3.125. So as long as you can understand that, we just experienced the 4th halving and we're on the 5th epoch or 5th cycle, I think you're already ahead of the game of understanding what's going on. Because, so we are in the 4th halving just occurred, and now we're in the 5th cycle. And now right now, we need another 210,000 blocks to be created before the next halving. So sometime in 2028. So we're a far way out. So sometime in 2028, the world will be halved again, and now we'll be back to like a little over 1.5 Bitcoins, the game being played. And then again, another 4 years, another 210,000 blocks. So 21 million coins, every 210,000 blocks, the reward is cut in half. We just experienced the 4th halving, and right now, so as I speak, the Bitcoin computers are playing a game, and the reward of that game will be 3.125 Bitcoins. And again, the stock to flow, I think that's, again, kind of cycling back, that's important to know, is just the idea that it takes a while for people, and especially, right, you think of, we learned economics, supply and demand, right? And those two things, where those two things meet is the price. So the supply, and what I focused really on is the supply, which is 21 million ever, but 3.125 every 10 minutes. The demand, that's where people get focused up on, the demand side of the human beings, right? How many people are talking about crypto and Bitcoin? How many people are buying it? How many people are selling it? That's kind of the USD price, right? How much is a human being willing to pay for Bitcoin at any particular point in time? That number is very volatile. What's very stable is that every 10 minutes or every block, 3.125, right? Tick tock, next block, tick tock, next block. So every 10 minutes, 3.125 will be churned out 210,000 times in a row. And then after 210,000 times, 1.56 Bitcoins will be created every block. So that number is very stable. And that's fixed, and that will keep going up to 2140. The demand side, that's much more complex. That's much more hard to understand, right? How many people want to buy Bitcoin? How much are they willing to pay? Then you get into the world of human emotions. Humans love to gamble. Humans are very irrational. So that's kind of where these big price spikes come out. Because again, it takes the market or people, there's a lag, right? So not everybody understands what we understand right now, is that, the Bitcoin supply has been essentially halved right now. It takes a while for the market to kind of feel that constriction. And that's kind of historically what has led, and I think we all kind of right when the price does spike up, then everybody hears about it, everybody talks about it, and then more people jump in, which kind of leads to these almost giant spikes in price, and then it comes down as people get used to the new normal. So that's the price spikes is the demand side. So I think it is fair to say that the price will be going up. I don't know what the price will be, but I think too, as you think of if the supply is fixed and if the supply is kind of this constant that we know about, then when you think of demand and you think of the internet too, do we think, will more people be using the internet in the future? Will there be more uses of the internet, right? So I think the demand will only continue to rise, and especially I think that's the thing is nobody really understands now is what will this look like going forward as demand keeps increasing, but the supply keeps getting halved, till essentially there's, it's all fixed. Then you have to buy it from, the only way to get it from someone would be to buy it from them or trade with them instead of, playing the math game. So yeah, I think the stock to flow, it's not rocket science, but it's just a kind of good visualization of how this halving impacts the supply, because there is a lag. So I'm getting close to the end of the show. I hope this was a good explanation of the halving. I think that's just one kind of small niche of Bitcoin. I think I may go deeper into other areas. I think there's a lot. Future shows, and let me know maybe in the comments what you'd be interested in learning about, or maybe what you don't understand. I can see some potential topics like what's the difference between a coin and a token, because there is a difference between a coin and a token. Who was Satoshi Nakamoto? Other topics that there could be. Yeah, energy usage. I know that's a huge thing too. Of Bitcoin, does it use a lot of energy? How much energy does it use? Is something that that's another topic in itself. Because again, this is I don't fully understand it. No one does, right? All we can do is try our best to not be David Letterman and not think things are stupid, but to kind of research them ourselves. So yeah, there's just a lot in the space. So let me know in the comments. I'll probably be monitoring just the show comments to see what people might be interested in learning in. I could do shows on, I got a little too in Ethereum or other coins. But I think the more Bitcoin at this point, it seems to be pretty stable relative, that it's gonna be around, and it's probably going to be a digital gold, and it has that path to go forward to somebody. It seems unlikely that another crypto might come in and be the new digital gold, just because Bitcoin's kind of the OG on the scene. It was the first kind of the invention of blockchain, and it's probably going to keep going as long, go for a while, at least till 2140. So as I wrap up, I just want to challenge you to, and I'm not going to comment on whether Bitcoin's a scam or not. I don't know. I think that's a gray area of whether it's a scam. But I think there is a need for some sort of alternative currency. There's some sort of need for a digitally native form of payment, something that's not constrained by the legacy world, that's not determined on how some banker feels, or how some government official, how much money they want to make on a whim. I think there is kind of this need, and especially I think people that have grown up with the internet kind of just see that the internet is its own thing, and it needs its own form of currency. It can't, a lot of the currency we have now and a lot of the money was it's a legacy technology that's trying to adapt. It's Blockbuster trying to adapt to the internet. It's something trying to do something in a way where it doesn't work. When you think of the armies of people, human beings that drive to office cubicles every day just to verify transactions, and they don't work on Saturdays or Sundays. If I can send an email at any point in time, why can't I send money at any point in time too? And that's something that code and computers can do much more efficiently. So thanks for tuning in. That was CoinViz and the Bitcoin Halving. Until the next time, I'll see you. TikTok, next block.